The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And it's another gorgeous day at the headquarters of Technical Trading and Investing at TFNN.com. And we're going to get going on here in just a second. Of course, the best laid plans of mice and men mean that not everything is working right at the moment. I think I've had my first computer crash in about 2 years, so I'm just starting to get everything back up and going. I think it's a issue with all these new video cards and the new video card drivers. I'm going to have to sort it out over time. And we're slowly getting back up to speed here, but another gorgeous day here at the headquarters of Technical Trading and Investing at TFNN, of course. And the big thing is just moving everything around on the screen, getting it all set up, getting it all started. But as we start the day out, we're up almost 14 points on the S&P cash, just a hair under 2 billion shares on the consolidated New York Stock Exchange tape. The NASDAQ is up 30 points, and the Dow is up 155 points. We've got a lot of news today, and I think maybe I've got this right here. Get this all restarted if I am ready. There we go. Okay, and that's it. And we're ready to go. Just wanted to get to the news right away because, like I said, there is a ton of it out here. It's going to take me at least the first half of the show to get through it. Probably the biggest news after the close on Friday was the announcement of the NASDAQ 100 being rebalanced. Of the stocks out there that are going to be coming in, it is Dish Network, DISH, Illumina, the biotech DNA company, ILMN, NXP Semiconductors, that's NXPI, TripAdvisors, TRIP, and Tractor Supply Company, TSCO. Most of those are up about 1%. Tractor Supply, just about 2%. Most of these other companies not doing so bad. Fossil Group coming out, FOSL, Microchip Technology, MCHP coming out, Nuance Communications, NUAN, and Sears Holding Corporation, SHLD, and Dental Supply International, symbol is XRAY. So in the past, we've actually seen something that's a little weird, which is you think, okay, now all these ETFs are going to have to buy all these new stocks going in, and I'm going to have to sell the old stocks going out. Normally, you're going to see some pressure on these stocks going out. But as soon as they come out, most of them have, on average, about a 5% pop in the next 30 days after they come out. After everybody's forced to actually sell them, they sometimes become a decent buy. Of the stocks coming in, a great deal of the shares from those ETFs are bought from the company's other divisions, i.e. they don't buy these stocks or individual stocks to put in their ETFs on the open market. They just buy from some of the ETFs or some of the funds inside their own companies. And you don't get the bounce that you would think a huge ETF like the NASDAQ 100 would mean, or people trying to duplicate the performance of that with something that they have themselves. But we're going to be seeing a little bit of displacement. Now, basically, we're looking at the change as of this Friday. It actually becomes active Monday morning, December 23rd, right before the bell. But for practical purposes, you'll see the rebalancing in the last 5 minutes on Friday. And, of course, we've got a lot of stuff going on besides then. Besides that, the third Friday of every month is expiration. And of course, we're going to not only have expiration, but in the last 5 minutes, this rebalancing. So probably going to have just a little bit more volatility than I thought. Pretty rare for them to go ahead and do it on this date, but I guess the way the dates worked out, probably not a bad idea. But just remember that we are looking at that. One of the things you should think about, and I bring up many times, try to bring it up once a quarter, is survivorship bias. And here's a very good time to look at it. And that is, we've got stocks coming out of an index. We've got stocks going in. Normally, the dogs come out. The new stocks come in. So in a year from now, is the same level going to apply? We've got a lot of stocks coming out. 5 is a pretty good percentage of a 100 stock index. What is the NASDAQ level going to be comparable to in a year when stocks act differently? Different volatilities, different sectors come in and out. For the most part, as long as Apple's there, you've got, 15% of the NASDAQ 100. So a lot of these stocks don't have the impact that it once would if, let's say, Apple was pulled out. But still a big one. But survivorship bias is the logical error of concentrating on the people or things that survived some process and inadvertently overlooking those that did not because of their lack of visibility, i.e. they take these in and out. So is the Dow really up 18,000 over all these years, or did they just keep the good and throw away the bad? The answer is easy to come up with. That's not it. But what survivorship bias can really lead to, especially at highs like we have now, is over optimistic beliefs because failures are ignored. They're basically taken out to the woodshed, and you just stay out of here. Don't be stinking up my index out here. We want to make the indexes look large and always growing so we can bring in new rubes to sell stocks to. That is the business of Wall Street, is pushing paper and selling stocks to the retail public. They need the retail public, and so far we haven't seen that retail trader show up in any kind of meaningful level. In fact, when we look at TD Ameritrade and some of the other people that come out on CNBC and talk about what their customers are doing, they're still at all-time lows for retail traders. The question is, after being several times burnt, have they learned their lesson and going to stay out of the business? Meaning, just who is Wall Street going to push the stock on? For the most part, it's ETF owners. They have to buy the stocks because, of course, if you're in the ETF, you've got to own it. A lot of people are saying that their particular retirement plan always takes money out every 6 months and puts it every 3 months, whatever, and puts it in some retirement fund that then again has to buy these stocks. So somewhat a self-referential reference and a feedback loop in that stocks that are in these indexes have to be bought, whether anybody thinks they're going up or not. And most of the time the dogs just end up being eaten, or that performance is being eaten by people that buy those ETFs, especially in retirement funds. But just remember survivorship bias, and when we look at the S&P a year from now, or the NASDAQ in a year from now, it is the S&P or NASDAQ minus stocks that went by the wayside, and their survivorship bias is heavy in the indexes. We had a nice move out here in Europe. The pretty much started moving up along with the U.S. futures when poor numbers started coming out in Europe, and we'll get into that in a minute. But basically, France is in a recession, and the only country in Europe doing good at all is Germany. Some people are talking about the Barron's cover over the weekend. This has been a counterintuitive cover for many years. kind of like the equivalent of being on Sports Illustrated and being a horrible player after that. But this one has, if you're not watching on Tiger TV, has a wonderful bull pushing down on the head of a bear on a merry-go-round. And they're all extremely bullish for their outlook, which is, I'd say, 80% wrong when they've had these big covers. Probably the most amazing cover of all time was the Barron's cover with Amazon.bomb. Instead of com behind it. Who would know? Of course, it did come down significantly in price, but it wasn't. Adding a little bit of the belief that the taper will not come at least this month. The number was poor, but they still have the average reading over the last few quarters. It's still on a trajectory higher out here. But they're still thinking, at least for the numbers that they give, around 7.8 year over year in the fourth quarter. And that's from the HSBC Economist. And, of course, they do their own numbers over there because the government, a little tough to find out if they're really telling them. We talked about France already in recession. France composite PMI fell to a 7-month low of 47. Anything below 50 is contraction. Again, they went a full commie in the last election, went full socialist. Well, I'll say commie, probably a little tough. Socialist truly, believing that a 35-hour work week and retirement at 50 and all the other stuff that they thought that they could give, we know that won't work, is truly hurting their economy. And right next door to them, the Germans working their little rear ends off and blowing all the rest of everybody in Europe away. Anyway, we'll be back in just a minute. You can 927-661.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every morning. ETF and option for all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You're all for the next trading opportunity to magnify Direction shares with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, contact Direction shares at 800-851 simply before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 and 8 different currencies. Now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts for Fibonacci formation setups of Timing the Trade Chart help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we come back, like I said, just looking at a market out here that, we're up 13.5 points on the S&P cash, 2 billion shares on the consolidated tape, still waiting for the Fed numbers. We're probably going to see volume dropping off, I would suspect, late today, probably 3:30. We're probably not going to see the kind of volume we saw last week, and we're probably going to have, 3.5 hours? I'm going to say 3.5, 4 hours of decent volume on Wednesday. And then that's probably going to be it for the high, well, I'm going to say for the high volume year. So if you are short, the old saying is don't be short a quiet market. Certainly you don't want to be short in a very low volume market for the most part. There's been a couple exceptions of low volume pullbacks that you could hold, but for the most part, you have violent reactions that stop you out rather quickly, and a lot of times instantly losing all the profit you made being short a market with low volume. That continues to make me think that we're going to be seeing or the next opportunity for high, probably going to be the first couple of days of the new year. But we'll see that. Now, of course, we've got some stocks moving. Avago Technologies, a major supplier to Apple, announced today that it will be acquiring LSI Corp for 11. It was up. Avago is up strong, which is very rare, but looks to LSI and Avago both. But we'll say pretty soon say goodbye to LSI, one of my favorite companies. Anyone else see oversized Avid's window, David? I have no idea what you're talking about. See oversized Avid's window. Huh. Anyway, we're recognizing no. Kind of within all the noise of last week, we probably missed a few things. And, of course, my friend who stalks me on Tuesdays and Thursdays, Andy, we've talked a little bit about this. But when it was more into the weekend before I had a chance to go through the testimony. But basically you have the EPA officials admitting in front of Congress that the federal ethanol blending mandate has put undue requirements on oil companies. We're, quote, recognizing that the blend wall has been reached. Christopher Gunder, head of the EPA's Transportation and Air Office. Of course, everybody in the Midwest growing corn loves the ethanol mandate. But instead of saying that for every gallon of gasoline you have to have 2 ounces of ethanol in it, they basically said you've got to pump in 16, billion gallons of ethanol per year, or whatever it was, 16. Yeah, I think it was 16 billion, 16 something. Instead of just saying a percentage of all gasoline had to be that. Well, with the miles per gallon going from about 22 when they wrote the law to 26.5 that we're sitting at today, we're not using near enough gasoline to use all that alcohol. So part of it is the how can you say it? Well, I'm going to say it this way. Ignoring the reality that we're not using enough gas, the states surrounding the Midwest corn growers are all still saying we should still use the same amount of alcohol. And most of these hearings are going to be about getting out of and dropping that ethanol mandate. At least they've already said we're going to give you a waiver, I think, for 1 billion gallons. But does that sound right? I'm going to have to think about the number. I remember the number 16. Can't remember all the digits that went behind it. But it looks like the discussions are more and more going to be about taking a significant amount of alcohol and maybe down to 5% to drop the prices of corn in the future. But reading between the lines, that's what it looked like. We're going from probably a 10% ethanol mandate to maybe a 5% ethanol mandate in fuel in the coming years. And that's to keep the price of corn down and not have everybody rioting for food. Anyway, we'll be back in a minute. Give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And what are we looking at here? And I'm just seeing if there was any real movement in the markets. Not a whole lot happening. Got some news. We got more people leaving RIM, or as they want to call it now, BlackBerry. What's that? BBRY, I think it is. Yeah, it's up 10 cents today. Not a lot of movement, but 2 more senior executives leaving. Pretty much a good indication that the end is in sight for that company. Whether they get sold off as pieces or eventually go bankrupt, probably looking at about half its value right now. So probably breakup value, probably about $3. In my guess, we talked to Tom about it a little bit in some of the past shows. Probably the only safe play would be buying the bonds and hoping that the patents go up in the court case during the bankruptcy, and maybe you get full rights back to those patents, and someone gets to sell those patents again, and you can make some bank on the bonds for RIM. But not a whole lot left out there, and of course, rats leaving a sinking ship. As we look at it, last night, if you missed it, the NSA was on 60 Minutes. Unfortunately, it was a bogus interview. It was done by a correspondent that had worked in the office, probably under the auspices of, well, we've already done his security check, so we can let him in the building here, all that kind of stuff. But there weren't any hard questions. There weren't, when he made assertions, the General Keith Alexander made assertions about what they were doing, knowing whether that was true or not. Most everybody sees it for what it was, which is a publicity stunt. Alexander flat out lied about a few things about what we were doing and what we aren't doing. Those documents have come out. They basically just say, no, we didn't, no, we didn't, no, we didn't. But I tell you what, it's still a problematic issue for traders. If we look at the numbers so far, the Software Association is saying that they've already lost $35 billion to foreign government. Some of the biggest loan they're talking about in lost sales. Cisco's basically talking about that themselves. IBM Corp has been sued by the Louisiana Sheriff's Pension and Relief Fund, which accused of concealing how its ties to what became a major U.S. spying scandal reduced business in China. Starting to see class action lawsuits about the liability that the businesses had staying quiet, forced on it by doing some business with. They're looking to recoup some of their money. I don't know how valid some of these things are and whether they're ever going to see a dime, but it's going to start distracting companies like IBM. I suspect they're the first, probably going to see other ones like Cisco, Microsoft, the big companies that write software and hardware start to see more and more pressure, not only from foreign countries, but from investors talking about how they were helping the NSA and didn't disclose it as a risk in the prospectus. Of course, one of the other things going on is, and most people haven't paid attention to it until now, is there was a giant bond gap that was brought on by the Treasury not issuing 30-year Treasury bonds from 2001 to early 2006. They've come up with a way of coming back and trying to fix that. Why one of the problems only be one delivery month, and it would be incredibly violent over time with that 5-year gap in it. They're trying to figure out how to put that back in. They think they found out the issue, but to me, reading through the original documentation that the exchange is providing, it really looks like we might have some high volatility even then, starting in early 2014 on the 30-year Treasury bond because of that huge gap of 2001 and 2006. But we're really starting to see that really be a problem in 2015. So traders out there look at it. Looking at the math so far, hard to figure out what they've done, but they have done something, and it is going to change the way that that contract trades and may put some additional pressure in the bond market, at least that longer bond market in the future. Just bond traders should be aware of it. Of course, everybody's talking about Google buying Boston Dynamics. I brought that up on the Tech Insider, about 6 or 9. They have a robot that looks kind of like a guy horse, top speed of about $29. And, of course, the guy left Google Android division and started his robotics division. This guy, he's actually bought 8 different companies in the last 6 months, all in robotics. He bought this new company that makes the Cheetah, which claims to hold the record for the fastest legged robot in the world, running more than 29 miles. Works in terrain, works in snow. If you Google him, you can find video of it. But it kind of is like a mechanical horse. And, of course, most people are waiting for the Skynet to become self-aware and have probably Boston Dynamic making hounds chasing us all down. And hunter-killers, if you're really familiar with the Terminator movie. But could this be the beginnings of Skynet? I think right now we need to be looking at the laws that Asimov put in his books, the 3 laws of robotics. The most important one is that a robot cannot hurt or through omission allow someone, a human, to be hurt as part of its basic programming. And, of course, that's easy to rip out and put back in. But I think we probably need to get those laws in now sooner rather than later. Microsoft has announced that it's getting in the content delivery business. It is producing a series called Halo based on the games. It's going to be out in May and come out on Xbox One and Xbox 360. They're also going to be doing a reality show about soccer and a Rob Dyrdek linked comedy to the docket. Those were supposed to be out in March. They're now saying May, maybe mid-summer, all getting delayed. Light bulb manufacturers will cease making traditional 40 and 60 watt light bulbs the last day of this year. GE's already moved its manufacturing for those into Mexico, but going to be a great deal of them for a while. If you can get a bulb that lasts for a decent long time, and now you can get better with fluorescent lights and LEDs. Most of the fluorescents die 1/5 into the rated lifespan. That's become problematic. The LEDs have been doing a lot better, and maybe we're going to be seeing the year of the LED commodity bulb next year with the change in the light bulb, but I don't think it's going to do Cree or any of those folks any good. I think it is a product fast becoming a commodity. Saw some articles out this weekend about global warming and just my thoughts on what we can learn on their predictions for global warming and our predictions for the market and how those work together. Well, I know a lot of people truly believe it is almost a religion for the global warming people. I am a skeptic. But here are some of the things that have been predicted. One of the senior scientists that had been pushing global warming from the earliest days, from Anglia's Climatic Research Unit in 2000, predicted that in 8 years, he said a few years and later, 8 years, winter snowfall will become a rare and exciting event. Well, 2008 has come and gone. 2013 is here, and of course we have plenty of snow. He went on to say children just aren't going to know what snow is. Implicit in this "where did the heat go" shell game is the inconvenient reality of making predictions. Predictions are based on models, and when you have garbage in, you're going to have garbage out. We actually have 17 years of decreasing temperature, and of course we here at TFNN know that we need to eventually put in stops. The question is, at what point would you put in a stop and say, hey, your model has failed? One of the problems with not ever being able to say you're wrong is that you continue going down the wrong road. Maybe these guys are right, and maybe if they'd admit that they're wrong on this model, maybe they can make a model that truly works and predicts the future. So far, no good. Some of the problems they've had is they've been relying on land-based thermometers. The problem is the thermometers, where have they been placed? Are they over a concrete that holds temperature far longer in the day? How high are they off the ground? There was no uniform standards for where to put the thermostats. Good article by Mark Landsbaum at the OC Register if you want to Google it. But my thoughts were this. If you're a scientist, you make a model and it has a particularly good failure, a epic failure, as the kids say today. You come out and you say that there's going to be 16 hurricanes that hit the United States this year. Not one hits the United States. At what point that you're so far off do you actually put a stop in? The biggest problem is that we can't, or a lot of people would like to think that they can predict anything given enough evidence and data. The problem is some systems are so complex as to not be predictable. I think that the market is predictable. I think you can a lot of times see into a year. But who would have predicted 9/11? Who would have predicted some of the other things that have started, like the First World War, the shooting of Ferdinand? A lot easier to say that things can't change, but what if an asteroid came in? We're still seeing a great deal of problems, and probably a great parallel for going out and predicting markets is predicting the weather or predicting climate a long time in the future. But just a thought out there that maybe if you truly believe in something like a global warming, maybe it's time to say, okay, this model doesn't work. I still believe in it. We're going to look for additional evidence in this. But, of course, several papers out last week showing that we were 3% average centigrade hotter in the 1400s than we are today, long before anybody started burning coal. So it's a problem. See what else we have. I wanted to talk about just markets that somewhat could be brittle. I think we do have a brittle market now, but one of the problems of going in and predicting long-term basis off statistics is that a lot of times they will remain calm. What Nassim Taleb called it was the fourth quadrant. And if you want to read more about how statistics, especially at the edges, tend to be horribly wrong in making predictions and models, I've got this link here. If you want to email me at path@tfnn.com, I'll be glad to send you the link too. But basically, when you get down to it, statistics are good and models will be right about 75–80% of the time. The last 20% of the time, you can't get back and get into statistics that work that well. There are just too many things that can change, but pretty good treatise. And of course, he wrote an entire book on the fragility of markets and how to make them anti-fragile. And has some coarse words to say about those that believe that they can make these markets unfragile by a wave of a wand. We have one IPO left for the end of the year, I believe. This is going to be AMC Entertainment, the theater chain, AMC's second largest movie theater operator in the United States. 343 locations, $350 million. We'll be back after this break.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I believe that we're all here to contribute something unique, and that deep within us lies a special gift, a special talent, our own bit of genius, just waiting to be tapped into. When it comes to trading and investing, I can help you tap into yours. Hi, I'm Steve Rhodes with TFNN, and on Thursday, December 19th, I'm hosting a 1-hour workshop where I'll share with you my most incredible discovery yet, the Rhodes Momentum Indicator. I developed this tool with one outcome in mind, to do what nobody else considered possible, to put the power of the most advanced indicator, scanner, and trading strategy in the hands of people just like you and me. I can promise you this, you'll never look at a chart the same way again. This event is available to all subscribers to my newsletter service, Mastering Probability, which for the holidays is available free for the next 30 days. No charge whatsoever to new subscribers and no obligation on your part. Please join me by going to the homepage of TFNN.com to sign up for this once-in-a-lifetime opportunity.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
A pretty quiet day so far, other than the open and the initial push. 2.2 billion shares on the consolidated New York Stock Exchange tape. If you want links for these things like the volume, you can always email me at path@tfnn.com. I don't think I got anything here. I got a couple of emails, but probably not anything worth answering today. We're going to look at a few charts before the end of the day. Boston Properties at BXP. Looking at this, a lot of these ETFs in the REITs look like they finally found a bottom coming into the end of the year. Maybe this is a temporary thing. We're going to bounce and then see these break these lows. But you look at Boston Properties, BXP, had a high volume low on August 19th, $98.21, 1.7 million shares. I've been trying to get back into this, and basically about 1 million shares is what you're getting. Probably going to get what are you going to get? A little less today. Nice little doji out here. Other ones in this sector are Camden Property. This is another one. A little lighter volume, not as clear in this chart. But any close back above 57.03 would negate the November 26th low that had 740,000 shares come into it yesterday with Friday with 450,000 shares. Of course, we have options expiration on Friday. All the option market makers have been busy pushing out a lot of puts, making me think that 1800 is where they would love to see this market expire on Friday. I can't see a lot that would say that 18 to 1825 is where we close out the end of the year. Maybe we've got a little bit more going on out here. Maybe it's probably all dependent now on whether or not people can be talked into selling before the end of the year. And, of course, that's going to be the Fed speak. But it'll be interesting. Of course, while we look at another one out here that is looking a little interesting, which is Green Mountain Coffee Roasters, know that when we go into the new year, the Fed is also going to change. We're going to be losing 2 doves and gaining 2 hawks. And a lot of people haven't thought about that just yet, that there will be rotation in those Fed governors. And it is going to be to the hawkish side. My guess of having any kind of unanimous vote in the near future is probably going to get a lot harder in that first January session. Green Mountain Coffee Roasters, when I'm looking at this high out here, the November 21st high, $73.57, 19 million shares, 3.3 million shares here the other day. This is where I like listening to Andy. I think, well, maybe coffee going up, maybe it's going to be problematic. Already seen a little bit of pressure in Starbucks. But if we're talking coffee and being short, Green Mountain Coffee Roasters, we have to be looking at the short interest on this. Hopefully over the next couple of weeks, we see very light volume, and a lot of these people leave their short positions, and we get an opportunity to put them on without a high short percentage that this thing seems to be perennially stuck with. Interesting out here is some of these solar power stocks that have been hammered down to the lows. We're at least going to find some temporary support out here October 31st. On this one, it was 27.74. 8.1 million shares. We got into that for about half. So I can imagine that we're, at least without any huge market moves, we're probably going to find some of these stocks finding support out here. And I hope you all have a great and safe day. We'll be back tomorrow, same bat channel, same bat time. A lot of news. We'll get into a lot more charts tomorrow. See you then.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trade newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.